IRS Form 668Y is a crucial document that signifies a federal tax lien, a legal claim by the government on your property due to unpaid taxes. This presentation will guide you on how to address and remove such liens effectively. Federal tax liens are silent statutory claims that automatically arise by law, securing the government's interest in your property. They involve assessment of liability, notice and demand, and potential neglect or refusal to pay. Form 668Y alerts creditors and the public by filing with local and state authorities, establishing the IRS priority over other creditors, and creating a permanent public footprint of the lien. Federal tax liens impact various aspects of financial life, including assets, credit, business operations, and bankruptcy. They attach to all current assets and can severely damage your credit profile. Understanding the difference between liens and levies is crucial. A lien is a claim securing the government's interest, while a levy is the actual seizure of property to satisfy tax liability. Ignoring a lien can lead to a levy. Full payment of your tax liability is the most direct way to eliminate a federal tax lien. The IRS is required to release the lien within 30 days of full payment, freeing all property from the government's claim. A discharge targets the removal of a federal tax lien from a specific piece of property, allowing you to sell it while the lien remains on other assets. This strategic application is essential for property sales. Many real estate owners think that they cannot sell their property with a tax lien attached. They can, even if the sale of the property does not yield enough funds to pay off all the tax liability. Subordination allows another creditor to move ahead of the federal tax lien in priority, facilitating mortgage refinancing and enabling business loans without removing the lien itself. The IRS will another creditor to be in first lien position if it is in the best interest of the government. A withdrawal removes the public record of a federal tax lien, erasing its footprint as if it were never filed. However, the tax liability remains until fully paid or resolved. The taxpayer must owe less than $25,000 and enter into a direct debit installment agreement and make 3 consecutive payments before the IRS will agree to withdraw the tax lien. The IRS Fresh Start Initiative, launched in 2011, offers options like direct debit withdrawal to help taxpayers clear their credit history and manage tax liabilities effectively. If the taxpayer owes more than $25,000, they must pay the balance down below $25,000 in order to secure the withdrawal. All required tax returns must be filed, estimated payments, withholdings, and federal deposits, and need to be current. This is known as tax compliance. Taking timely action is crucial to prevent your property from being seized by the IRS. Watch our free video, The Ultimate Guide to Solving Your IRS Tax Problems, for comprehensive guidance on dealing with IRS tax problems and how to fix your taxes for good. Schedule a consultation when you are ready to get started. We'll evaluate your situation, explain your options, and help you develop a strategy to resolve your tax issues.